Good morning, everyone. My name is Craig Nazzaro, and thank you for joining us this week for today's presentation of In the Trenches. I know you're used to hearing Brad Rustin open these webinars, but unfortunately Brad cannot join us today, but don't worry, he'll be back for next week's installment. Next week we're going to be covering developments in bank partnerships, particularly the OCC's announcement Tuesday, saying that they're moving forward with their rule promulgation around bank partnerships and developments in the space. We have a lot of clients asking about those issues, so join us next week for as we delve into those. But today I am joined by Liz Donaldson and Samer Roshdy, who are members of the Financial Services Regulatory Team here at Nelson Mullins, and who many of you are familiar with either through daily work or their work on the Entrenched series as well. They've done other presentations in the series. Today we want to dive into the issues and best practices and the future of banking those customers that are involved in hemp and CBD and the hemp and CBD businesses. We want to touch on the growth of the industry, the ongoing conflicts between state and federal law, the fluid approach to enforcement and guidance that the DOJ has taken, recent developments within the space, and all the compliance concerns, particularly BSA and AML concerns around banking, CBD, and hemp customers. This week, if you have any questions, please use the chat button on top of your screen, and we'll do our best to answer them as they come in. And with that, I'll turn it over to Liz to get started with the presentation. Liz?
Thank you so much, Craig. Welcome, everybody, and good morning. We hope this will be a very interesting presentation. Today, we're going to talk a little bit about the growth of CBD and the growth of hemp. I think in our daily lives, just operating around in the world, we've seen a huge influx of the way that CBD has become super prevalent in our daily lives, whether that's at the grocery store, on billboards on the highway. Everywhere we go, we seem to see CBD-infused products. So we'll talk a little bit about what CBD and hemp is today and how they're regulated by the federal government and some of the financial regulatory concerns around providing banking services to CBD and hemp. We're going to talk today just as sort of a primer about three major groups. We'll use some acronyms, so just to kind of get some logistics out of the way to get going. We're going to talk about cannabis-related industries more generally, or CRBs. We talk about CRBs that can include marijuana-related businesses or hemp-related businesses, things that kind of generally fall under the umbrella of cannabis. When we're talking about marijuana-related businesses or MRBs, it's just that subset is still illegal as controlled substances at the federal level. And then we'll also talk about hemp-related businesses, or HRBs, which are the hemp part of the cannabis-related industries that are legal following the passage of the Farm Bill in 2018. And we'll talk about kind of the roller coaster of regulation associated with each of these industries as we try to parse out the difference between what is marijuana and what is hemp, and how that impacts both the hemp industries and CBD. So why is this important? This is an industry that is growing tremendously. Cowen has estimated that by 2025, this could be the industry could be worth $16 billion in just CBD alone. And the use of these, as you can see from the chart on the side is wide-reaching in every aspect of consumer life. There's opportunity for hemp or CBD to be used. It's not just the food and beverages or the personal care that seems to kind of make the news or that you might see in the grocery store. There's a growing textile industry, particularly for hemp and for construction materials, that is growing very, very quickly. Some have estimated that this could be closer to $20 billion by 2024. So it's growing very, very quickly. I think it's interesting, as part of the studies that Cowen did in March of 2019, 7% of the people surveyed indicated that they are currently using CBD as a medicinal supplement, primarily in the form of, of things that you take in the form of as a pill or as a cream for anti-inflammatory purposes. It's not just CBD that's growing. Hemp is growing, too. It's wide-ranging opportunities for hemp. It's already become a $5 billion industry. It is expected to continue to skyrocket going forward, especially in the area of textiles and construction materials. Samer, I'll turn it over to you.
Thanks, Liz. And as Liz just mentioned, it's important to note that, broadly speaking, the world of cannabis is generally defined and split up into two categories. First, you have your marijuana, and second, you have your hemp. At the chemical level, both of these contain the active compounds CBD and THC, so it can get a little bit confusing when you're talking about both of these regimes. But at the legal level, there are important distinctions between the two terms. Now, this legal distinction, however, goes back to the Controlled Substance Act, which listed marijuana as a Schedule I substance, which, generally speaking, that makes it illegal to, at a federal level, manufacture, distribute, dispense, or possess for medicinal or recreational use. The Act also makes it a crime to aid and abet such actions, which, as you all are aware, would be the primary concern for third parties providing services to these businesses. Now, historically, that definition was super broad and super encompassing, but recently, in 2018, we actually have the Farm Bill that was passed and signed into law, which created an exemption from marijuana for what it described as hemp. Now, the bill basically carved out from the definition of marijuana an exemption for hemp, which is defined as those plants that do not contain more than 0.3% of THC. The definition itself is a little bit more broad than that, but as simply as we can put it, it comes down to the level of THC that is present in the plant. So with that, I'll turn it back to Liz.
Samer mentioned pre-Farm Bill, the Controlled Substances Act had a very broad definition of what is considered to be marijuana, which would be treated as a Type 1 controlled substance, which is subject to the highest penalties under the Controlled Substances Act. There was a lot of uncertainty about how MRBs, marijuana-related businesses, and CRBs are to be treated at both the state and federal level. At the federal level, there was a blanket control under the Controlled Substances Act that made it illegal, as Samer said, to manufacture and distribute these. And the laws contained significant federal fines and even the opportunity for imprisonment to the extent that it could potentially be a felony, depending on the volume or the type of activity involved. Proceeds from marijuana funds are typically considered to be illegally obtained funds because they are obtained as the result of a violation of the Controlled Substances Act. And as Samer mentioned, there can be implications both from those funds and for those who are aiding and abetting the violation of the Controlled Substances Act. This got a lot more complicated when states started to pass laws legalizing certain types of medical or recreational use of marijuana. Leaving hemp aside, the complicated part when states, in a myriad of ways, either on legalizing medical marijuana or recreational use at the state level, there was a question of what was the implication between the Controlled Substances Act and these state laws. Some states, Colorado in particular, have gone as far as to start promoting the banking and the providing of financial services to these marijuana-related businesses, where marijuana is legal in some shape or form. This creates a lot of ambiguity, and it's somewhat concerning to those of us who look at the industry and try to figure out, we've got a conflict between state and federal law. Who do you follow? And typically we follow the more restrictive, so we would follow the federal law here. But what results is that there's a large industry that remains completely unbanked, and there's a lot of money, as we saw just in the hemp and CBD alone on our earlier slide. There's a lot of money to be made in this, and there's a lot of money that is floating out there that needs a home and a place to sit and deposit. And businesses that offer these services who may need access to the traditional banking services such as wire transfer, ACH, and even just access to the Fed for deposit purposes. And so because of this ambiguity, there's a lot of uncertainty associated with that. And Samer's going to talk a little bit about how this has changed and what sort of steps the federal government took to mitigate some of the concerns associated with the differentiation between state and federal law.
Yeah, and with this slide, as you can see here, we just wanted to highlight also the rising number of institutions that are actually providing services to MRBs, and this is based on the SARS data that's been reported to FINCEN. As you can see here, Although the number of institutions banking MRBs is not that high, it's around 700 or 800 or so, as compared to the thousands of institutions in the U.S. I think it's estimated that we have still around 6,000 to 7,000 institutions in the U.S. So there's a large gap in the market for these businesses, these marijuana-related businesses. Now, interestingly enough, as you'll see in the last point below in this PowerPoint, there are some institutions that are strictly banking hemp-related businesses, which, as we've talked about a little bit ago, this is a way to avoid the regulatory uncertainty that comes with banking the broader marijuana-related businesses that is mainly due to the difference between federal and state law. And if you go to the next few slides, we're going to be discussing the COLE-MEMO. Now, the COLE-MEMO was issued by the former Attorney General James Cole back in 2013, but it basically signaled a more hands-off approach to federal enforcement of these marijuana-related activities. And generally, there were two memorandums. One was issued in 2013, and one was issued in 2014. The one in 2014 was more dedicated to financial crimes, but Liz will talk about the first one that was issued in 2013 here.
As Samer said, in 2013, the federal government saw what was happening in the market and the growth of the number of states that were permitting the operation of MRBs and CRBs within their state, and tried to resolve some of the concern about the differences between state and federal law. The 2013 COLE-MEMO, as Samer alluded to, was focused more on the actual businesses themselves. It served as some guidance for local law enforcement and for federal law enforcement operating in states where MRBs and CRBs were legally permitted to operate under state law. And it detailed the circumstances when the federal government would apply the Controlled Substances Act to regulate and prosecute these types of companies. And the understanding was that there's some differentiation between the traditional allocation of federal and state efforts in policing controlled substances. States and the federal government both have controlled substances laws, and they vary from state to state. And so that there needs to be some sort of collaboration between local law enforcement and federal law enforcement about this type of regulation and prosecution. The COLE-MEMO importantly did not alter federal law. At this time, the COLE-MEMO was passed, all cannabis products, both marijuana and hemp, remained illegal at the federal level. But the Department of Justice in the 2013 COLE-MEMO clarified that they would defer to the state laws which legalized marijuana-related businesses if the state had met three different requirements. First, the state has to have a strong and effective regulatory enforcement system to control the cultivation, distribution, sale, and possession of marijuana. This meant that the state had to have specific and clear regulations regarding the licensing of businesses, how those businesses would be reviewed by state regulatory agencies, that they were doing key oversight of both the growth process and enforcement of the fact of dispensaries to ensure that they were only selling products that were grown pursuant to a licensed grower, and that there was a robust enough system at the state level to regulate. Second, the state must administer the system in compliance with the state's laws and regulations. It wasn't just enough for the state to have laws and regulations in their books addressing the cultivation, distribution, sale, and possession of marijuana, but also that the state would administer this system. And finally, the state could not interfere with 8 federal priorities that were set forth in the COLE-MEMO that talked about the way that the federal government wished to mitigate the interstate commerce aspects related to marijuana. And these were specifically detailed in the COLE-MEMO to address certain priorities that that Attorney General Cole felt were clearly within the federal purview. As we mentioned, the 2013 COLE-MEMO did not address what happens with providing financial services to these companies was more focused broadly on the businesses themselves. In 2014, a second COLE memorandum was passed, and Samer will talk a little bit about how this specifically addressed financial crimes and the implications it's had on providing financial services to the industry.
Yeah, and one additional point that I wanted to highlight about the COLE memorandum, it basically in those 8 priorities, it basically highlighted the 8 things that prosecutors should be on the lookout for. If these priorities are interfered with at a state level or through these businesses that are operating in compliance with state law, then that's when prosecution was emphasized or promoted. So generally at that time in 2013, when the first memorandum came out, if you were a business that was operating in compliance with state law and not violating any of the 8 federal principles, which, I mean, some of the examples were pretty straightforward. One was you shouldn't operate the hemp-related business as a way to hide an actual criminal activity such as marijuana-related businesses, and shouldn't operate the marijuana-related business as a business that is for other drug activities and that is in violation of state law. But it also just wanted to ensure that revenues were not going to the distribution of marijuana to minors or anything of that sort. So that takes us into the second COLE memorandum, which was issued in 2014, which reiterated very similar principles and priorities, and it actually went in a step further to give guidance specifically dedicated to addressing financial crimes that were related to marijuana. It gave examples of how banks could be implicated in crimes. For example, if the bank provided banking services to marijuana-related businesses and knew at the time that the legal marijuana was actually being diverted to prohibition states, or that the funds were being used to conduct other criminal activity, then the bank would actually be prosecuted, or the other institution that was participating in this would also be prosecuted. So this memorandum essentially served as a notice to banks that although you may be providing banking services to these marijuana-related businesses, and in reliance on that 2013 memorandum, you also shouldn't be able to turn a blind eye to diligence and compliance and monitoring related duties that you would otherwise have under your traditional regulatory requirements. So, for example, your BSA and AML obligations. In cases where you were turning a blind eye or not upholding your monitoring requirements, you would be prosecuted as well. So, with that, I'll turn that over to Liz.
As Samer said, just the COLE memorandum is oftentimes touted as kind of being the green light for states where marijuana-related businesses are legalized, for those businesses to continue to operate clearly within the confines of the law, and for banks and other financial institutions to provide financial services to those marijuana-related businesses. The reality, as Samer highlighted, is that that's not quite so clear. The COLE memorandum never changes the status of marijuana. We don't have any clarification on that until the Farm Bill was passed in 2018. It does not bar any sort of investigation or prosecution into the offenses at any time, and it did not take any discretion away from the Department of Justice officials or any U.S. attorneys within any jurisdiction to prosecute these types of crimes. What it did was provide some guidance as far as what the 8 key federal priorities were, and mitigated some of the risk of ongoing prosecution. So, well, oftentimes it's seen as a very protective memo. The protections were not complete. More concerning was for the industry and for those providing financial services to the marijuana-related businesses was that on January 4th, 2018, Attorney General Jeff Sessions rescinded the COLE memorandums and such that they no longer have enforcement on the types of actions that the DOJ would take towards prosecuting or investigating marijuana-related businesses and those providing services to them in states where those marijuana-related businesses are acting legally. they clarified that in Attorney Sessions' memo that the Controlled Substances Act still remains effective law in the United States, and that the passage of the Controlled Substances Act reflects Congress's determination that marijuana is a dangerous drug and marijuana activity is a serious crime, and that the Department of Justice was not in position to question the opinion of Congress when passing the Controlled Substances Law. What resulted following the rescission of the Cole Memorandum was some question about what is the status in each of these states now and whether or not banks could continue to provide financial services to these industries and whether the industries could continue to conduct their business at all. So I'll turn it over to Samer again to talk a little bit about some of the approaches that state attorneys general have taken following the rescission of the Cole Memorandum.
Thanks, Liz. So with the rescission of the Cole Memorandum, as Liz was talking about a little bit ago, the law now is substantially more unclear as it relates to marijuana-related businesses. Now, the default rule is generally that it is a prohibited substance under federal law, and on the other hand, it's also legalized in some other states. So as you can see here, there are about 30 or so states that have actually legalized marijuana in some form or use. So these two legal regimes are directly in conflict, and that's kind of why there's a lot of uncertainty in this area right now. But as was talked about a little bit ago, with this rescission, the DOJ still retains the right to enforce the law, including any violation of the CSA, which includes any enforcement actions related to marijuana-related businesses. But despite this, we are not aware of any enforcement actions that have actually been brought against financial institutions that are providing banking services to cannabis businesses in states where it's legal. So that's just one interesting point that's following the rescission that we've noticed in the market. But with that as well, I wanted to also highlight that when the current Attorney General, William Barr, was going through his confirmation hearings in January of 2019, he actually provided some guidance on his positions by testifying that, in quotes, he would not go after companies that relied on the Cole Memoranda. So, but despite this statement, I just want to be clear, the enforcement policy of the DOJ is subject to change at any time. So, in reliance on that one statement from William Barr is not recommended, but it certainly shows some guidance on the way he thought that the rescission was handled. So the state of legal limbo will likely keep persisting so long as the federal and state laws are in conflict, which they are for the foreseeable future. But this should take us into the next portion of our presentation, which we'll discuss the important exemptions and distinctions in the law being made for hemp-related businesses, which are a little bit more clear than the actual broader marijuana-related business term that we've been using.
So if we look at this from a historical standpoint, up to this point, which is now we're going to talk about what happened in 2018, there was no distinction under the Controlled Substances Act regarding any cannabis-related businesses. Marijuana and hemp were treated identically, and usually all regulation or questions that arose were specifically related to the issues and conflicts between state and federal law relating to marijuana. However, there's another aspect of the cannabis-related industries that is important to discuss, and that is hemp. And that is, the importance of the hemp industry has only continued to grow and grow since 2018. In 2018, a bill called the Farm Bill was introduced into Congress, and the Farm Bill, which was signed into law at the end of 2018 by President Trump, allowed for the hemp cultivation broadly. It didn't specifically designate pilot programs, which had historically existed, that there was some exemption to allow for state hemp pilot programs on a small scale, primarily for studying market interest or economics or doing some sort of agricultural biological development, which had existed under a program issued by the federal government in 2014. Instead, what the Farm Bill did was specifically exempt hemp, which is defined as cannabis containing less than 0.3% THC. There's no measurement as far as the content of CBD in hemp under the Farm Bill, but clarified that hemp was excluded from the definition of cannabis under the Controlled Substances Act, and therefore there'd be no restriction on the sale, transportation, or possession of hemp-derived products as long as those products are produced in a manner that's consistent with law. And the consistent with law portion of this is that all hemp remains legal as long as it hits that is below that THC threshold, and that hemp was grown pursuant to a state or federal government licensing or cultivation program. So following the states went and passed comprehensive programs pursuant to the Farm Bill, which allowed for the growth of hemp within their state. The biggest myth that exists about the Farm Bill is that it legalizes CBD. As we talked about a little bit earlier, part of the confusion that exists around cannabis and marijuana and hemp are about what the definition is. So cannabis typically refers to largely the plant in general. And then what's clarified under the Farm Bill is that hemp is differentiated from marijuana in that it is 0.3% or less THC. Cannabis or CBD is located in both marijuana and in hemp at varying levels, just depending on the plant. What the Farm Bill does is remove hemp-derived products, so any plant that's containing that less than 0.3% THC, from the Controlled Substances Act. So any hemp-derived CBD would be legal under the Farm Bill, whereas CBD that's derived from marijuana would remain subject to treatment as a Schedule I substance of the Controlled Substances Act. So there's a lot of there's a lack of clarity about the source of CBD, and we'll talk a little bit about that when we talk about the due diligence processes associated with providing financial services to the hemp and CBD industry and clarifying the source of the CBD, because, as I just mentioned, it still is a controlled substance if it is derived from marijuana rather than from hemp. I'm going to turn over to Samer to talk about what the current regulatory environment is post the Farm Bill and some of the ways that both the federal government and the states have begun to regulate both hemp and CBD.
Thanks, Liz. So at the federal level, your primary regulators will be the Food and Drug Administration. That is for when the hemp and CBD will be used as ingredients in food and cosmetics and that sort, or drugs. And then you also have Department of Agriculture, which has been pretty influential in this space. It has established a regulatory program for domestic hemp production throughout the states. It also enforces the requirements for maintaining information on all important aspects of hemp production. So it requires information generally on the land where the hemp is produced, on the tests for the THC levels to make sure that the hemp is compliant, and that it never reaches that 0.3% or more than the 0.3% threshold. And it also adds requirements and regulations that govern how to dispose of plants when that threshold is reached. So, but yeah, at the state level, it's typically also split up by state, but it's generally under the State Departments of Agriculture under the various states with their own licensing programs. Now I'll shift over to Liz, who's going to talk a little bit about the FDA regulatory requirements in the space.
As Samer mentioned, and he'll talk a little bit more about this in a few moments, the USDA has been the largest regulator, at least at this point, of hemp and hemp-related products, predominantly CBD that comes from hemp. We're seeing a growing trend towards the FDA regulation of particularly CBD products. Generally, the FDA does allow for whole hemp seeds, hemp seed protein powder, and hemp seed oil to be used in human food under the Federal Food, Drug, and Cosmetic Act. The clarification from the FDA is that any CBD product that is subject to the Food, Drug, and Cosmetic Act must meet the required THC levels to be qualified as hemp. So any of these products cannot contain CBD that was derived from marijuana. However, the FDA has begun to regulate this specifically related to some of the claims that have been associated with the medicinal attributes of particularly CBD. Under the drug portion of the Food, Drug, and Cosmetic Act, the FDA has qualified CBD as a drug and has currently passed one cannabis-derived prescription drug or prescription drug that contains CBD in it that is used to treat children who experience severe epileptic seizures. And is studied by the World Health Organization and in trials by the FDA, this drug has actually proved to be extremely helpful and beneficial. But since the FDA has approved a drug that contains CBD, CBD can be regulated. It is regulated by the FDA as a drug under its drug administration powers. So any products that advertise any medicinal benefits, such that they would rise to be considered to be a drug under that statute, would be regulated by the FDA. As such, CBD can't be sold as a dietary supplement. This is what we would anticipate looking into our looking glass would be the next area that the FDA would begin to regulate. We've seen a large influx of CBD products that suggest that they have dietary or some other medicinal benefit, particularly for treating muscle aches and pains, and the FDA has begun investigating these on a large scale. As we mentioned here at this point, the FDA sent several warnings to companies that were illegally selling CBD products and branding them as medicinal. On the cosmetic front, we've seen a growing influx of CBD cosmetic products, and that is permitted under the Food, Drug, and Cosmetic Act so long as the product does not come adulterated or misbranded following the introduction of CBD into the cosmetic product. But to be clear, if the product is intended to affect any structure or function of the body or to cure or mitigate disease, then it's treated as a drug under the Food, Drug, and Cosmetic Act and regulated more strictly as such. And there are circumstances where some of these products may be regulated both as a cosmetic and a drug under the Food, Drug, and Cosmetic Act, and it's only a matter of time till we see the full powers of the FDA regulating the CBD industry as it continues to become more and more prevalent. But as Samer mentioned, and we'll talk a little bit more about now, to this point, the USDA has been the most comprehensive regulator of hemp and CBD products within the United States.
Yeah, and what they've done is generally provided broad requirements that each state's individual plans must actually meet in order to be approved by the USDA. So they've laid out several different aspects of production that are subject to the requirements, which include, state plans must have regulations governing the land used for production. They must include information regarding the land used and how that information will be collected and maintained and shared with the USDA. The plan will also need to detail processes for sampling and testing, the THC levels, which, as we've mentioned a little bit ago, you have to stay within that 0.3% threshold or below. You're going to have to develop ways to dispose of the plant if it goes above that threshold. And so with all of that, it basically adds an additional compliance enforcement procedure that can be used in conjunction with the state's procedures. So it's a very broad regulatory regime that's in place. But with that said, we'll go into the next portion of the presentation, which you all are probably more interested in, which is the regulatory climate behind actually banking these hemp and hemp-derived CBD companies. So with that, I'll pass it over to Liz.
Since the passage of the Farm Bill, there's been several layers of interpretation, primarily from the Financial Crimes Enforcement Network, that discusses the regulatory regime for financial services companies providing services to hemp and CBD related businesses. One of the most significant of which came out in 2019, where the federal banking regulators and the Conference of State Banking Supervisors confirmed that banks are able to provide banking services to the hemp industry now that hemp is considered to be outside of the Controlled Substances Act following the passage of the Farm Bill. This regulation specifically noted the importance of the Farm Bill on their changing regulatory regimes, and emphasized that marijuana is still a controlled substance, and so this regulatory guidance only applies to the extent that the plant is considered to be hemp. Primarily, this regulatory guidance focused on the Bank Secrecy Act aspects of this, and clarified that banks are not required to file a suspicious activity report on a customer solely because they are engaged in the cultivation or growth of hemp in accordance with the Farm Bill and state hemp programs, so long as that hemp is grown in accordance with the rules and regulations set forth by regulatory agencies in addition to those statutes. Banks should, however, continue to file their standard suspicious activity reporting procedures for hemp-related businesses and file a SAR if any indica of suspicious activity warrants. And we'll talk a little bit about what that means and what type of suspicious activities that FinCEN is looking for when they're talking about that. Further, bank customers who are hemp-related businesses are continuing to be responsible for their compliance with the Farm Bill and applicable regulations, and the banks maintain discretion as the type of permissible services and accounts to offer these types of customers. There's no obligation under this guidance for a bank to provide services to a hemp-related business, and there's no obligation for a financial institution to provide all of their banking services to a hemp-related business just because hemp has been legalized under the Farm Bill. Banks have an ongoing Bank Secrecy Act and a money laundering compliance program obligations that are commensurate with the level of complexity associated with these types of business, which we'll talk about that there is some potential significant complexity because, as Samer noted, there's an obligation to comply with USDA regulations and the state hemp programs. And that banks, when deciding whether or not to serve hemp-related businesses, have to continue to comply with their requirements related to customer identification, SAR reporting, CTR reporting, as well as their ongoing risk-based customer due diligence obligations, which we'll talk a little bit more about in detail in a few minutes. Of particular focus, as I mentioned, is that they, in this interagency guidance, the regulators emphasize that marijuana is still a controlled substance, however, and that banks should continue to follow some FinCEN guidance that was issued in 2014 regarding the expectations regarding SAR filings related to marijuana-related businesses. This guidance from 2014 expressly relied on that 2014 COLE memorandum. So it's very interesting that the regulators have continued to rely on the 2014 COLE memorandum, despite the fact that it was explicitly repealed by Attorney General Sessions when he became the Attorney General. This presents a ongoing potential conflict even amongst the federal regulators who seem to be disagreeing about what the ongoing regulation is. As Samer noted, that Attorney General Barr has indicated that he will, to some degree, follow the COLE memorandum. He said that while he was going through confirmation hearings, and that was not in any sort of form of final or interpretive guidance that has any bearing on DOJ actions, and DOJ opinion can change at any time. So the DOJ has the ability under federal law to continue to prosecute both marijuana-related businesses and the financial services companies that provide support to them, but that may contradict some of this FinCEN guidance that was reiterated in this 2019 interagency guidance related to hemp, that FinCEN will continue to look and treat marijuana pursuant to the COLE memorandum. As we start to talk about what the financial services obligations are associated with this, Samer's going to talk a little bit about some of the challenges at a high level associated with providing financial services to hemp-related businesses.
Thanks, Liz. So yeah, we've generally broken down these challenges that we've seen into about 5 categories, 5 broad categories. There's a bunch of issues and sub-issues within those, but generally speaking, there are 5 large categories. The first, you have your legal environment challenges. Because the industry is relatively new, there's going to be some associated risks with that, and which may not have been discovered yet. But as more research on hemp and hemp-derived CBD occurs, we're expecting these regulations to continue to change. And second, you have your identification challenges. How do you differentiate between a purely hemp-related business and a marijuana-related business that sells both marijuana and hemp? And this prospect alone could be challenging for a bank trying to ensure that their customers are in compliance with this requirement. And then third, you have your verification challenges. Similar to the last challenge, you'll want to ensure that your customers are obtaining valid licensing and adhering to other compliance requirements under both the federal and state programs. And fourth, you have your diligence challenges. You're going to need to conduct comprehensive diligence on your customers. You're going to need to know exactly what their business practices, sources, and customers are, and what they're doing within their business. And finally, probably the most important challenge, you have the operational challenge of trying to implement all of this together. You're going to have to, after signing on the customer, you're going to have to still continually monitor these hemp-related businesses and programs to ensure that the companies are handling their compliance obligations in the proper way, and only dealing with products that remain below the actual legal limit that's permitted. So.
And Samer, I just want to raise, if I can interrupt for a second, that's in your third-party oversight program, right? You're talking about, like, when you're doing the CDD, ongoing, you should be checking the levels of the products and have questionnaires that are diving that granular into the operational functions of the businesses, correct?
Yeah, definitely. And we've actually helped a couple clients in developing some of these questionnaires, and they are very detailed, a lot more detailed than your typical sign-on procedures for other businesses. Even though it's a legal product now, hemp is a legal product now, you're still going to have to break out additional questionnaires just to ensure the compliance, that it doesn't ever verge into the illegal marijuana substance.
And I think that what complicates some of the line between hemp and CBD and marijuana is understanding where, if you're banking a business that sells or produces a CBD product, understanding the source of their product is a little more complex than just banking a hemp product alone. So making sure that you have procedures in place for understanding the difference between the two, and that there may be some additional caution required when banking a CBD business as opposed to a hemp grower who may be growing a plant under a state hemp law. So you have to make sure that your program is tailored to address those risks at both the state and the federal level. We're going to shift now to talk a little bit about some of the guidance we've had from the Financial Crimes Enforcement Network, particularly related to the Bank Secrecy Act and a money laundering program that you would be expected to develop if you're going to bank these types of services. In all circumstances, I think we all know that you must have customer due diligence when opening and beginning a relationship with a new customer. FinCEN has made it clear that, as a baseline, no heightened customer due diligence is required. However, an institution should confirm the hemp grower's compliance with state, tribal, government, and USDA licensing regulations. And FinCEN has said that there's 2 ways that you can do this. You can either obtain a copy of the license, or alternatively, you can obtain a written attestation by the hemp grower that they are a validly licensed entity. And that is a new guidance has recently come out from FINCEN that you no longer have to independently confirm by obtaining a copy of the license or contacting the state hemp program to make sure that the program is compliant, that you can now receive a written attestation to comply with your customer due diligence obligation. Additionally, as part of your CDD processes, you may want to seek additional information. Overall, FINCEN has said, as they typically do, that this should be a risk-based approach to review, and that it's important to monitor those customer relationships to identify the ongoing risks associated with that customer's particularly risk profile and the types of activities that they are conducting. We're going to talk a little bit more about some of the detailed issues that might vary depending on the type of hemp-producing entity or CBD-producing entity that you may choose to provide financial services to.
Yeah, so if you're dealing with actual hemp growers and processors, you need to tailor your due diligence so that it is specific to the actual risks posed by those entities. So in relation to that, you'll need to verify and review their state registrations, confirm any reported violations with both the business and state authorities. And so you also need to obtain information on type of business conducted. Is it just staying in the production and processing area, or is it also deviating into retail? You're going to need to exactly know what it's doing and where the hemp that it's growing and produced is actually going. You'll need to also gather information on the sources of hemp products and hemp seeds. Where do they get those? Is it obtained from anywhere that could potentially be seen as a marijuana-related business and not strictly a hemp-related business? You should confirm the manners of testing and sampling of the THC levels, which we talked a little bit ago. And finally, you also need to conduct diligence on related parties, such as their outside investors. You'll need to determine what the business is doing, actually vet their employees, or their employees operating in a way that would preserve the compliance obligations, or do they have like something shady going on, so to speak, with the way they're vetting their employees. So with that, I will turn it over to Liz to also discuss the retail-specific due diligence requirements.
As we talked about, there's some additional risks that are posed by banking people who are selling CBD products or hemp products because they have no control over the growth or production of the plant itself. So when conducting due diligence on retailers, it's important to verify that they're registered and licensed to conduct business and to be providing these types of services, to obtain a full description of the types of products that are sold and the type of customers that they serve, which includes that you need to review the types of marketing materials that reference the hemp or CBD containing products to ensure that there's no issues as far as false representations relating to medicinal efforts associated with the products that could result in FDA issues. You want to confirm that the business is not the hemp processor or grower, or you should go and operate under the slides that Samer just talked about and do diligence them that way. It's important to gather information about the distribution of the hemp and products, as well, including the source and the manner of diligence taken by the company who is selling on the source of the products to ensure that the CBD products are derived from hemp-derived products below that legal THC threshold, so that the CBD is hemp-derived rather than marijuana-derived. You'll want to obtain some information on the location of the business and its customers, and to determine the types of investment and the manner in which the business is vetting their employees. With that, I'll shift over to Samer, and he'll talk a little bit about suspicious activity reporting for the hemp and CBD industries.
Thanks, Liz. So, generally speaking, because hemp is now excluded from the definition of marijuana and is thus no longer a Schedule I substance, institutions are no longer required to file SARs on customers merely because they are operating in the hemp industry and acting in accordance with any applicable state laws or regulations. However, you're generally expected to comply with the standard SAR procedures which should be tailored to the specific business. You won't need to actually just file a SARS merely because the customer is acting in the space. You need to just be on the lookout for actual suspicious activities from that customer. So, for example, if your customer appears to be producing hemp in a jurisdiction which hemp production is illegal, that's probably a suspicious activity. So, if the customer appears to be using the hemp-related business as a mechanism to launder money from marijuana-related or criminal activities, that's a suspicious activity. If you have customers that are attempting to conceal involvement with marijuana-related businesses, that's a suspicious activity. And finally, if you have a customer that won't or is unable to provide your institution with, licensing proof and other sorts of documentation, that's a suspicious activity. So when you're going through these, if you're ever recognizing through your monitoring and controls process that any of the hemp customers have transactions that are, commingled or intertwined with marijuana-related activities, you'll have elevated obligations, so to speak. And some of the requirements that are more broadly detailed will actually be in the FINCEN's marijuana guidance from 2014.
So this is a very complicated legal regime, and there's a lot going on, clarifying between hemp and marijuana and the types of SARs you may have to file, and especially on the customer due diligence front. But there's some hope for clarity, and the financial regulators recognize that there's a lot of confusion in this industry. Recently, just last month, the NCUA issued some guidance to credit unions who were considering engaging banking in the hemp industry. And while they emphasized that they would expect each credit union to employ sufficient customer due diligence, as we just talked about, and comply with federal law, they gave some encouragement that credit unions may provide any or all the customary ranges of financial services for business accounts, to loans, to any sort of ongoing commercial relationships that the credit union would want to have with lawfully operating hemp businesses that are operating within that particular credit union's field of membership. So there's hope and understanding amongst the financial regulators that this is a complex environment, and they're being very clear that so long as you're providing financial services to hemp businesses that are compliant with state and federal law, that there is no reason to be concerned about providing financial services to this legal industry. As the NCUA said, they encourage credit unions to thoughtfully consider whether or not they're going to safely and properly be able to serve hemp-related businesses. But so long as it's within the confines of the Farm Bill and state law, that and all of the ongoing CDD and SAR reporting obligations to the Bank Secrecy Act, there's little reason why a bank with compliant procedures should not provide financial services to hemp industry. So I guess Samer is going to wrap us up talking a little bit about some additional hope and clarity that we may see on the horizon for both financial institutions that are providing services to hemp-related industries, but also a little bit about some of the clarity that may come related to marijuana-related industries, since often the two are conflated, and particularly with respect to CBD, there's still an ongoing lack of clarity.
Thanks, Liz. Now, with that said, in today's webinar, I think there are about three main things that we would like you all to take away from this. First, cannabis regulation as a whole has become increasingly complex at both the federal and state level. But second, as it relates to marijuana-related businesses specifically, you'll need to understand that marijuana is still a prohibited Schedule I controlled substance. So even though some states have legalized its use and production, it's still federally prohibited. But with this specific point, we want to point out that there is some actual potential relief for banks wanting to bank these marijuana-related businesses in the future. The Safe Banking Act has actually been proposed at the federal level, which would create protections for institutions providing financial services to cannabis-related legitimate businesses and service providers for such businesses. So this bill is actually already passed in the House in late 2018, but so far it's been currently stalled at or within the Senate Committee on Banking. So something to look out for. And this past May, actually, we saw a different version of that Safe Banking Act included in the House's COVID-19 relief bill, but that bill is also stalled in the Senate. So just some legislation to look out for. But finally, with the third point that we want you all to take away that Liz mentioned a little bit ago, as it relates to hemp-related businesses, hemp is now actually exempt from that definition of marijuana. So this opens the door to banking these historically underbanked hemp-related businesses. But to do this, you'll need to definitely understand that you'll need to implement a robust risk program, which will be designed to control and monitor the various risks that we've all outlined today. But with that, I'll pass it over to Liz and Craig to see if they have anything else to add before we close out.
Yeah, and Craig, feel free to jump in if you have anything else, but I would like to thank you all for joining us today. If you have questions, please feel free to add it into the chat function, which is located on your screen. It looks like a little voice bubble. And I want to thank you all for attending and listening to us. And I also want to say a thank you to one of our particular attendees on the phone, Jake Lewis, who is working with us this summer here at Nelson Mullins, who assisted us in putting together some of these slides. So thank you, Jake, for all of your help. With that, I think that we will open it up for questions if there are any.
Well, if you do have any follow-up questions or you want to reach out to any one of us, please feel free to reach out to any one of us listed on the materials. You'll be getting these materials, as always, about a day and a half once we finalize them and give them out to the attendee list. And we look forward to you guys joining again for our presentation next week. And thank you very much.